Hello everyone. In the last video, we were discussing about how to solve 12 marks problems on admission of a partnership for section D. So today I am going to solve one more example. So that is the reason I am standing before the camera along with my camera technician Mr. Shivraj. Dear students, the second example will be on your image. Look at the image. Okay, the example. Suresh and Shankar are partners in a firm, sharing profits and losses in the ratio of 1:1. It does mean that there are two old partners, their profit sharing ratio that is 1:1 means both are equal partners. Their balance sheet as on 31st/3/2017 was as follows. They have provided their old balance sheet, which is dated as on 31st/3/2017. So the old balance sheet it is regarded to the old partners only. Look at on the liability side: creditors, bills payable, reserve fund, capital accounts of Suresh, Shankar. They have provided one more, that is accumulated profit, that is P&L account. So like this, liabilities are here. Look at on the asset side: cash at bank. Here they have provided cash at bank, stock, debtors. So already they have provided the provision for doubtful debts, furniture, machinery, buildings, patents. So these are the assets from the old balance sheet. Assets and liabilities from the old balance sheet. After this balance sheet, so you can see the few examples. Few adjustments, On 1/4/2017, they admit Jagadish as a new partner for 1/4 share in the future profits on the following terms. They have admitted the new person, namely Mr. Jagadish, as a new partner. He is an incoming partner. With the following conditions, look here, the first term, that is Jagadish should bring in cash rupees 50,000 as his capital. So here the incoming partner must bring rupees 50,000 in cash for his share of capital and rupees 25,000 towards goodwill. Second adjustment, that is depreciate machinery by 10%. So depreciate machinery by 10% means here the machinery is depreciated. So on the asset side there is a machinery, so mark for the adjustments as a minus. So next, increase provision for doubtful debts by rupees 4,000. So already it is provision for doubtful debts. Look at on the asset side. So after that, debtors, PDD is 2,000. They have already maintained the 2,000. So here in the adjustments, increase provision for doubtful debts by rupees 4,000 means, so here we need to maintain the total provision for doubtful debts is rupees 6,000. Old rupees 2,000, so newly rupees 4,000. Total provision for doubtful debts is rupees 6,000. So buildings are revalued at rupees 1,20,500. Look at on the asset side, buildings were 92,000. So now the buildings valued 1,20,500. So how much it has, whether it has increased or decreased. So by observing this, so opening value of building, it was 92,000. Now it has revalued of rupees 1,20,500. So this is increased. With this, here we need to prepare revaluation account. The first account, that is revaluation account, that is nominal account. So second one is partners capital account. Thirdly, new balance sheet of the firm. So now I am going to draw the table for solving this 12 marks problem. Look here. The first one is revaluation account. Revaluation account. As I said, dear students, this is the nominal account. With the help of this revaluation account, we can ascertain the profit or loss on revaluation of assets and liabilities before admitting the new partner. So this profit or loss are to be distributed among the old partners in their old profit sharing ratio. That is the reason we need to prepare this revaluation account. So particulars, amount. If you want to decorate this account, you can draw one more line. And then second account, that is partners, plural apostrophes, capital account. So there are totally 3 partners. So initially there were only 2 partners, 2 old partners. So now they have admitted one more partner. That is the reason now they have become 3 partners. Here I am drawing combined partners capital account. This is personal account, dear students, that you have already studied. So personal account, real account and nominal account. This one is personal account, which refers to partners. So that is the reason partners are persons. This one is nominal account. Particulars. Who are those? Suresh, Shankar. Suresh, Shankar. So new partner Jagadish. Particulars. Suresh, Shankar. Third one, that is Jagadish. Jagadish. So third one, that is new balance sheet. In the problem they have provided old balance sheet. So now it is new balance sheet. After admitting the new partner, it has become new balance sheet as on. So on admitting date only we need to write here 1/4/2017. 1/4/2017. Dear students, one thing I would like to say you all, these kind of problems are very much essential. The practice is very much essential for solving these kind of problems. So here you need to work hard regarding these kind of problems. The practice is very essential. You need to solve more number of problems, then only you can easily solve these kind of problems. Okay, liabilities, rupees, amount, assets, rupees, amount. Don't write DRs here, why? Because it is not an account, dear students, keep in mind. So very interesting. So the problem. Look here, how I am going to solve this problem. Now I am going to start with from the liability side. First one, creditors, bills payable. These two are the outside liabilities. There are no adjustment for these two outside liabilities. So that is the reason I am going to write it directly on the liability side of the new balance sheet. The first one is creditors. Creditors. No adjustment for creditors, that is 40,000. 40,000. Bills payable 45,000. Okay, these two are the outside liabilities. So there are no adjustments for these two liabilities. So that is the reason I have written directly to the new balance sheet on the liability side. Very simple task it is. After that, what is the reserve fund? Reserve fund, it is undistributed amount which has maintained as a reserve fund. So now it is to be distributed among the old partners. So before that we need to write the opening balance. My balance brought down. What is their opening capital? 1,30,000. 1,30,000. There was no opening balance of Jagdish. Why? Because he is newly admitted person. So now I need to distribute reserve fund. Keep in mind, old partners are equal partners. Reserve fund, total reserve fund is 15,000. We need to distribute this 15,000 equally. So 7,500, 7,500. And now reserve fund. So one more last one, that is also the inside liability, P&L account. So that is accumulated profit. We need to distribute among the old partners in their old ratio. That is equally. The 30,000 is to be distributed equally by 15,000 each. No need to distribute up this to this new partner. So with this I have completed all the liabilities. Now I am going to start from the assets. So very important, first one, cash at bank. Cash at the bank. Look here. Opening cash at bank is rupees 30,000. In the first adjustment only, the incoming partner has brought 50,000 for the sake of capital and 25,000 for the sake of goodwill. So total cash at bank rupees, look here, 55 plus 50, 1,05,000. Yes. So now we need to write this amount of rupees 50,000 and 25,000 is in the capital account to buy bank account, you can write. So 50,000 is the capital. Goodwill is 25,000. Buy goodwill. The incoming partner has brought rupees 25,000 for the sake of goodwill. That amount is to be distributed among the old partners in their old ratio. That is 1:1. 25,000 is to be distributed by rupees 12,500. 12,500. Yes. Next is what? Stock. Is there any adjustment for stock? No adjustments for stock. So stock is directly written on the outer column. Stock 25%. Debtors, there is an adjustment. Debtors, the book value of debtors are 40,000 less PDD. The old PDD of rupees 2,000. So now they have mentioned increase provision for doubtful debts by rupees 4,000, means need to increase it by rupees 4,000. Total PDD is 6,000. The net debtors 34,000. So new item here, it is 4,000. That is the loss to the firm. We need to write loss is on the debit side income is on the credit side. 2 PDD. How much? 4,000. Okay. Furniture. Very simple. Look at the furniture. What is the amount of furniture? Furniture of rupees 10,000. Is there any adjustment for furniture? No adjustment for furniture. Simply write it on the outer column of rupees 10,000. Exactly. 10,000 furniture. Next, after this furniture, the machinery. There is an adjustment for machinery. So that is the reason I am going to write it in the inner column. Machinery 15,000. The adjustment is depreciate machinery by 10%. Less depreciation by 10% means 1,500. So net machinery is 13,500. This is the loss. It is to be written on the debit side of revaluation account. To machinery, rupees 1,500. So building, okay, there is an adjustment for building also. So that is the reason I need to write it in inner column of rupees 92,000. Here it is revalued at rupees 1,20,500. Add means it has appreciated. Appreciation. So how much? 1,20,500. So what is the difference? So initially it was 92,000. Now it is 1,20,500. So okay. 1,20,500 minus 92,500, 28,500. Am I right? So okay. So 28,500 is the increased value by building. Now if you has any confusion, you can see it in calculator also. Here I have made it by the manually only. Okay, so this is increased value. It is the income for us. Need to write it on the credit side by buildings. So how much it has increased? So 28,500. So 28,500. So one more asset, that is patents. Patents, no adjustments for this asset. So that is the reason I am going to write it on the asset side only. That too on the outer column. 20,000. With this I have completed the balance sheet along with the adjustments. So so now I am going to see one more time the few adjustments. So Jagdish should bring rupees in cash 50,000 and 25,000 goodwill. Depreciation made, increase provision. So all the adjustments are also taken. So now I would like to close all the accounts. Look at the first account. So it is more on the credit side of rupees 28,500. 28,500, 500, 23,000. So 23,000 is the profit on revaluation of assets and liabilities to old partners. We need to distribute it among the old partners. So, namely Suresh, one more partner, that is Shankar. equally, we need to distribute them equally. 23,000 into 1 by 2. 23,000 into 1 by 2. How much it will be? So 10,000, 11,500. I hope. Exactly 11,500. 11,500. This is the profit on revaluation. Is to be distributed among the partners equally. So this amount is to be transferred to partners capital account by revaluation account 11,500 dash. Now I need to close this capital account. Look here, the total of the Jagadish is 50,000 and this one 500, 1,500, 2, 4, 4 plus 5, 9, 16, 3, 1, 4, 4 plus 3, 76,500. The next 500, 1,500, 2, 4, 9, 16, 2, 3, 4, 4, 1,46,500. 1,46,500. So here I am making totals manually. So dear students, better you try it with the help of calculators. 1,46,500, 76,500. This one is the 50,000. So entire amount becomes the balance, the closing balance of capital, balance carried down, balance sheet figure. So no item is on the debit side, that is the reason the total amount becomes the balance, that is closing balance 1,46,500, 76,500, 50,000. So here we need to transfer here by balance brought down. Again we need to write 1,46,500. Don't close here, just write it 76,500. So here I am working hard because insufficient, due to insufficient place. Don't close the amounts. So whatever you have written by balance brought down, simply leave this. So here capitals Suresh, the first partner is Suresh. His capital, his closing capital is 1,46,500. The second one is Shankar, 76,500. Jagadish, 50,000. Make this total, write it on the outer column. 13, 6, 13, 13 plus 4, 17, 2,73,000, I hope. Okay dear students, here I have made one mistake, extremely sorry. So here I have written the opening balance of capital 1,30,000, but it is not like this amount. The opening capitals are, here they have given 60,000 and 40,000. Look here, 60,000 and 40,000. With this we can get the total The total capital of Jagdish is 50,000. It is already correct. Now the Shankar's capital 500, 1500, 2 to 4, 4 plus 5 9 and 7 16. 2 plus 1 3, 3 plus 1 4, 4 plus 4 8, 86,500. So now 500, this one 1500, 1500 2, 4, 4 plus 5 9, 9 plus 7 16. So 2 plus 1 3, 3 plus 1 4, 4 plus 6 10, 1,06,500. Exactly right. 1,06,500, 86,500. One lakh 6,500. This one is 86,500. 1,06,500. This one is 86,500. The total capital of these three partners. So 1,013, 6 plus 8 14, 2,43,000. So make the total of the balance sheet. Total balance sheet is 3,28,000. 3,28,000. So while making totals and all things, the calculator is very essential, dear students. So with this, I would like to conclude this second example. So let us solve one more example in the next video. Thank you very much. See you on next video.